So look, I mean, on the fiscal math, right? They did the right math, right? So they could have actually used up all the massive additional transfer that they got from the RBI, which was almost like half a percentage points of GDP in spending. They did not do that. They split it up, half in additional spending, another half in actually bringing down the fiscal deficit, which makes next year's target of reaching fiscal deficit of 4.5% that much easier. And clearly, India needs to consolidate its very large stock of debt. So on the fiscal front, I think you can't fault the government. The question is, are they reading the growth leaves right? And as we're saying, I think if you look at India over the last 2 years post the pandemic, recorded growth has been strong. But if you look at the drivers of growth, there's essentially been just two of them, which is public infrastructure and global and services export. It hasn't broadened out to consumption. It hasn't brought it out to private investment. So until unless private investment kicks in, it is going to be very difficult for India to keep sustaining these 6-7% growth rates just on public infrastructure and on services export, which again, as I was saying, is sort of stabilizing at a high level. It isn't growing as fast as it was a couple of years back. So India clearly has a problem of figuring out what its new growth drivers are and how to propel those growth drivers. And unfortunately, I don't think the budget did very much on either of the two fronts.